FIGR is set to make its debut on the Nasdaq today. We're awaiting the start of trading there after the stablecoin issuer raised more than $787 million in its U.S. IPO on Wednesday. Meanwhile, crypto exchange Gemini, founded by Tyler and Cameron Winklevoss, boosted the price range for their IPO planned for Friday. So how much gas does the crypto frenzy on Wall Street have in the tank? Joining me at the desk, David Greider, Finality Capital Partners, head of liquid investments, which invests in things like we are discussing. Thanks for being here.
Thanks a lot for having me.
So it has been so interesting. We were talking earlier in the hour about the IPO window generally and just that it has improved, and that coincidentally or not, many of these new offerings are in the crypto/fintech space. And that's certainly true of FIGR and now of Gemini, awaiting Gemini. Now, the person we spoke to earlier just described Gemini as a lower quality IPO in comparison. How are you thinking about that opportunity and whether you or your investors want to get into something like that?
It's a great question. I think that if you're betting on Gemini, you're really betting on this future convergence of Wall Street and digital assets. And the reason maybe your prior guest described it as lower quality, and obviously, people can debate, is the historical financials really since the 2022, we can call it a meltdown of digital assets, haven't been as strong as other exchanges and other businesses. Now, I think that the reason I say if you're interested in Gemini, it's a bet on the future, is because you're looking at probably the Nasdaq partnership, the tokenization of equities, what that could all mean for the convergence, and what that could mean really for this forward outlook for Gemini. So I think that's probably the things you have to bet on here, and obviously markets are forward looking, and that's really the key to underwriting this one.
There are lots of ways to play that convergence, it would seem to me, right? And we've seen that convergence increasingly between Wall Street and crypto. What is that sort of landscape? Where are we in that evolution? And what is the future of that? And how can people invest in it?
Yeah, something we say quite often is that crypto is having its Internet 1995 moment. And if you remember, Netscape went public and Wall Street was really able to take these internet companies, they could bank them, they could back them, they could take them public, they could collect fees on them and write research on them. And that really put the machine behind, financing this wave of internet growth. And we think that we're in a similar period with the digital asset industry following, a lot of the regulatory changes that have happened that have allowed for Wall Street to both adopt on-chain and use the technology to become more efficient, but also to take these businesses and really help them, find capital. So I think we're in the very early stages over this long-term trend of that growth. And there's going to be a lot of interesting companies that we think are coming to market that people will definitely look at. And they perform pretty well, the recent ones as well. So that's creating more appetite.
It's pretty fascinating that you choose that 1995 internet, because what happened after that? You got the dot-com bubble, right? And you got a burst. You had too much investment, one could argue, too much enthusiasm, frothy valuations, and then the sort of fallout from that. And yes, of course, many strong companies survived that, but many did not. Do you expect that kind of a similar shakeout at a certain point in the business?
Well, I think as a liquid investor, we're always talking time horizons, right? So if you're going from 1995 to the 2000s, and then even in 2010, right, you ended higher on a bigger plateau in terms of market cap relative to the total equity market than 1995. So yeah, I think there's opportunities to be made and money to be made across this cycle. And obviously it's about managing risk. You have to manage valuations and froth, and obviously the macro environment plays a big role. But I think that you can focus on time frame here and now. There's a lot of excitement and a lot of opportunity, both on the fundamental adoption side and on the investment side.
Something I always struggle with within crypto is to figure out not what's for real, that's probably overstating it, but how do you figure out what is the best opportunity here when traditionally, at least in the currencies themselves, a lot of it has been sentiment-based. Now you actually have real businesses built on top of a lot of this. What kind of investment criteria are you applying? How do you counsel people? Like, how do you figure out where to put your money here?
Yeah, I think historically, a lot of the opportunities were in what would be called the token space, which you're talking about, maybe currencies. And now you have this other opportunities both on the equity side and the more traditional businesses. But I think on both fronts, you're seeing this market demand more fundamentals to justify valuations. As a liquid fund, I talk to, I would say, the majority, 90% of all the other hedge funds that are focused on the industry. And the view from those folks is they're very much underwriting tokens and companies like growth equities, and just like traditional companies in the past. And you're really looking at cash flows, you're looking at fundamentals, you're looking at the business, competitive advantages, and it's really just traditional growth investing, and that's how most of the market is starting to look at it these days.
I got to put a pause here. What does it mean that you're head of a liquid fund? How does that? That is not traditionally like a title that I come across too often.
So we have a hedge fund, Finality Liquid Opportunities Fund, and I say we're not a crypto fund. We're a fund that invests across digital asset industry. I manage that fund, and what we do is we invest in, whether it could be the tokens, the commodities themselves. It could be in the companies like Coinbase, Circle, or maybe Gemini. It could be in the debt of those companies, convertible debt. We've traded that as well before. MicroStrategy has quite a bit. So we are a liquid hedge fund. We focus on the industry, and we just try to manage risk and make money for our investors.
As opposed to the venture capital side of your shop, which is not the liquid part, right? Just a quick final question. Then, since you have that full scope of what you can invest in, what to you is the undeniably most attractive investment right now?
Well, I can tell you what our biggest holding is. Our biggest holding is a company called BitMine. And you and some of your viewers may know, I used to previously be head of digital asset strategy for Tom Lee of Fundstrat. He's the chairman of that company. And it's a company that, it's similar to MicroStrategy where, they accumulate a digital asset. He holds ETH in this case, and he's the largest one. And, he's grown the ETH per share since we've invested by 10x in dollar terms, and he's really grown it even by 20% over the last month. Kathy Wood's been buying it, and I think that, she sees value in that. And we like it, we like the team, and we like the opportunities.